Hi everybody, Peter Callis here with Market Jungle. I had a few requests today to do a trade review, and so I wanted to take the time to give you an idea of what my thought process was at the open this morning and talk a little bit more about the top-down approach. We briefly touched on this on the last video I pushed out, where we talked about looking at the one-day time period and then zooming in to the 2-minute time frame. That is just a small portion of the top-down approach. So in this video, I wanted to share a little bit more insights that hopefully will add some value to your trading routine. So first and foremost, on the Market Jungle Facebook page, I typically will give you guys some ideas of stocks that are in play. Above that, I'll typically share the global economic landscape for you by looking at the Asian markets and the European markets. And the reason I do this is it's taken that macro viewpoint of the markets. So what I do is I look at the Asian markets, I look at the markets in Europe, and I look at futures. And what that does is it gives me an indication of, one, how did the Asian markets close? If everything closed in the red, that has a slight influence on our market. Secondly, I look at the European market. The European market's a little bit more important, and the reason behind that is their close overlaps our open. So I weight my thought process a little bit more based on the European indexes to see what they're doing. And then lastly, the futures trade 24/7, so that just gives you an indication, are they trending up, down, or sideways? Now, after we look at that, there is certain criteria that I have built into our algorithms to find these stocks that are in play. And that's something that I'm sharing with everybody for free right now, and it's going to be something that will be launched on our dashboard, and it'll give you some more options to be able to customize it, so on and so forth. But looking at the stocks that we're putting out that are in play, we still need to take the top-down approach, and we still need to do our due diligence to figure out where are our entries and where are our exits. So let's go through today's trade. So first and foremost, on the left-hand side of my screen right here, you can see the S&P 500. I'm actually looking at the SPY, which is an ETF that tracks the S&P 500. If you want to see the actual S&P 500, it's symbol ticker SPX. So looking here, one of the things that I have marked on my chart is this pivot point right here. This is a very important pivot point at 323.34. If the market price, if the price action is able to break this, we will most likely see a big push upwards with some momentum. Looking at yesterday's trading day, you can see that we did test that pivot point, but if you look at the volume here, our volume's trending downwards while our price was going up. So this is an indication that, you know, it really wasn't going to break out yesterday. We can tell that by our volume pattern right here. As for today, you can see our volume dropped off even more, and if anybody traded today, I'm sure you saw the market was range bound all day long. Now, what I'm hoping to see here is I'm hoping to see this volume bottom out, and then I'm hoping to see another big push upwards while the price action is moving upwards and breaking the high of today. And that will be a good indication that, hey, we're gaining some momentum, there's buyers coming in, and hopefully we'll push through this price point, and that'll create a lot of volume coming in on the buy side if we do. Now let's go ahead and dive in a little bit closer. Last video we spoke about chart times. Now, typically in the mornings, I like to trade the 2-minute chart. This gives me a little bit more granularity. This allows me to see pullbacks that happen a little bit easier by having a little bit more zoomed in view on the candlesticks, so to speak. So on the left-hand side here is my SPY, the S&P 500. On the right is Twitter. They're both on the 2-minute time frame, as you can see right here and right here. Now, a couple things I want to point out. Let's go ahead and look at Twitter. So if we look at the pre-market action in Twitter and SPY and compare the two, you can see over here in Twitter, the price sold off, came up, it trended up nicely, and we consolidated. If you look over here, we had a similar pattern. We ended up trending upwards, and at the same time on the right-hand screen, you can see that we trended upwards as well. But over here in the SPY, you can see we sold off, we consolidated around the VWAP, and then we continued to sell off. During this time of this price selling off, you can see that we actually made another peak over here in the Twitter trade. So this right here was an indication, one of the indications that, hey, we do have some buyers in this stock. Now, as the market continued to sell off over here, you can see there's quite a bit of volatility right here. There's a big range that is trading in from here to here. And if you look over here at Twitter, you can see when the market gets to a low, the distance it travels from its highest peak to its lowest peak was quite a bit. And over here you can see the range that this is trading in is much tighter, and you can see there's not as much fluctuation to the downside in Twitter. So this is what really led me to select Twitter over all of the other posts that I made this morning. Was to me it looked like, one, there's more buyers that were supporting the price action in the morning, and two, the other thing I liked about it is when you have a consolidation like this, it gives the stock time to rest, and it allows more investors and traders to get into the stock. Now, what that does is if we break a critical point, it's going to create more momentum the longer the stock is at rest. So if we look at this consolidation period right here, first and foremost, it's really clear, right? Anybody can say, okay, this is the top, this is the bottom. And that's what makes this so powerful, is it's simple, right? So over here, you can say, okay, this was my entry right over here, and this was my entry because it was a break of the highs. And in this case, if I were to short this stock, I would have shorted it below the lows here, or actually, I would short it right here below this low. But it's a clear indication, right? It's very clear on this chart. And that's what makes this so powerful. So let's just go ahead and mark this thing out so I can give you an idea of what I was thinking of. So I knew I wanted to trade Twitter based on the pre-market action. And right here, if I click where my entry was, and I put my stop right here below the lows, I'll go ahead and clean this up. So my entry was right above the highs. Everybody's looking at the stock. They're all seeing the same thing. And my entry was 34.40. I ended up taking full size on this trade, and I ended up taking 3/4 of the position off here at 34.68. At that point in time, I ended up moving my stop loss. I took 3/4 here, so I had 1/4 of my share size left. I moved that stop loss up to my entry point. That protected my downside risk so that if the stock decided to reverse and just tank, I still made a profit off from it. And unfortunately, I did get stopped out right here. So on the second candle in, I ended up getting stopped out on the last 1/4 of my shares. But at the end of the day, it was the right thing to do. It followed my trading plan that I have outlined, and it led to a green trade. Now, the second trade I took in Twitter was right here. So typically when I trade, I look at everything as ranges, and I try to catch a trade when it's making a transition from trading in one range to another range. Now, ranges you can look at as a consolidation period. You can look at a range between pivot points. You can look at a candle as a range, since there's more granularity under or beneath that candle that is trading in a range. So long story short, my second entry was right here above these two candles. When I was watching this live, I saw the pullback. I was watching level 2, and I could see that the buyers were being replenished and that the sellers were being taken out on level 2. So I was watching level 2 right at this critical level point, and I ended up entering full size a second time. At that point, I had my stop loss down here. I chose this as my stop loss because it was below the range right here. And you can see the low of my candles was moving up. So I moved from here to here to here. So I was technically moving upwards. Now, at this point, I ended up taking 3/4 of my trade off right here. I did the same exact thing. I had a 1/4 of my shares left. I moved my stop loss up from here to here, and I got stopped out of my last 1/4 of shares. Now, sometimes that's good, sometimes it's bad. I mean, obviously, we all want to have big winners, but at the end of the day, if I'm able to capture 3/4 of my trade are profitable and a quarter of it's not hurting, and I can do that over and over and over again, it's still a good way to make money. Now, for any of you who were trading longer today, Twitter actually offered another great opportunity over here. So another great opportunity would have been to buy after this pullback right here, and that would have offered a very big winner today off from the alerts. So you can see right here that was at least a 3-to-1 risk reward trade. You would have entered right here. Your stop would have been below your lows. You could even put it way down here if you wanted to, and you still would have made out quite a bit. Now the other trade that a couple of you guys were asking me about is the MO swing trade. So let me go take a quick look at that. So let me go back out. So this was a trade that I found on Sunday night, and I posted it for everybody for Monday. So I did a little bit different type of analysis here. I'm going to cover this type of analysis on one of our video lessons, but I actually projected out a time that I was hoping this stock would hit my target within as well. So this is the daily right here. We talked about the entry already. I put a post out on the Facebook page of why I was looking at this trade to swing. And I kind of asked a lot of questions with the post. I was trying to get everybody to think critically about it. But my entry was 40.46. I took full size here. My stop loss was down here at 39.10. I did actually take half of the position off today, and I'll show you why. So zooming in here, you can see yesterday we had we hit a peak here in the pre-market hours, and then we had a big consolidation, and we couldn't move over the highs here. So I was hoping today that we were going to come back and push through these highs. Unfortunately, we didn't. We came over here and we traded in a range. I was watching it this morning, and I was actually watching it, this afternoon. And this point right here was actually where I took half of my position off. And this was simply due to the fact that we couldn't break this pivot point right here. If we could have broken this pivot point, I would have left full size on. But since we couldn't, I ended up taking half of the position off to be able to protect some of my profits and lock them in. Now, it doesn't mean that we're going to drop from here all the way down to here. It just might mean it may take a little bit longer. Now, the big thing about this is we have a very clear indication of where there's some resistance. So tomorrow, if we're able to break through this level, we probably will see a really good push up. And it may actually present an opportunity for a day trade as well, if there's enough volume coming into it. So I hope you enjoyed this video tonight, and I hope you may have gotten a couple insights from it. If you did, please like the video, share it with your friends, give me a thumbs up, give me some feedback. If anybody has any questions, feel free to shoot me a message. I'm happy to help any of you who may have some questions. Hope everybody has a wonderful night, and we'll see you in the next video. Take care. Bye-bye.